What is going on, traders? Welcome back to the Traveling Trader. CNBC continues to spill the beans on naked shorting. As I stated before, and contrary to popular belief, CNBC actually talks about naked shorting quite often, but in this segment that I'm about to show you and react to, they actually spill the beans much further and talk about ways that companies, that hedge funds can mimic naked shorts using derivatives as opposed to doing it on the open exchange. So even if a stock has a reportedly low short interest, it does not mean that hedge funds aren't shorting the stock using other methods, which I will talk about after watching this video. And then I will be going over two other stocks that are likely to see gamma squeezes or short squeezes soon. Actually, they already started at the time of this recording, and give you my DD on those. Let us get right into it. Here's a segment, and then I'll be giving you my AMC update and talk about those two stocks. Let's get right into it.
Yeah, and without getting really into the weeds, and when you say naked short selling, obviously that's a term of law. There's regulation around this, and as well, and we'll get to Karen and Jeff in a second because Karen did something very cool I want to talk about. But also, just very quickly, Guy, without going too deep in it, here's the thing about naked short selling. You can give the impression of naked short selling, right? Having more stock sold short than is publicly available or owned through these complex things 100%. We see them. Delta 1 strategies, synthetic shorts, options.
So when he says Delta 1 strategies, he's talking about Delta neutral strategies, which I've talked about before on this channel. So for instance, if you go out, if you're selling a call as a market maker, you would go out and buy 100 shares of stock in order to become Delta neutral, basically eliminating your risk. So he's saying that there are deceptive ways in which hedge funds can actually mimic naked shorting without actually shorting the stock itself. Let's continue.
Trades. It's not like 20 years ago. So the traders out there that are playing, oh, that's heavily shorted, let's go after it. You just need to be careful because there's a lot of ways, right, that Wall Street can do things that we don't necessarily see.
Without question, I think it was Warren Buffett that said, I think years ago, that derivatives were weapons of mass destruction, or I'm paraphrasing, but when used that way to lever a short position and do it away from the traditional way of doing it, we talk about float. In the environment you just talked about, float really doesn't matter.
He's actually right, Guy Adami. He's very right. So when we take a look at something like Ortex, right, and we're looking at float, basically what he's saying is just because you see a certain float availability does not mean that hedge funds are not short the stock. Now, it doesn't mean that they are short the stock either, but absence of evidence is not evidence of absence, right? And if we can sort of measure these things using other means, as I talked about, looking at failed to delivers as well as some other data, and we can get a sense of whether a company is shorted more than is reported, then yes, there is still a short squeeze possibility for that stock, obviously. Let's see if there's just a little bit more, and then I'll go into the AMC analysis and those two other stocks.
Because these things are levered 4, 5, 10 times, which, listen, I'm not privy to Archegos. I have no idea what they did, but one can only surmise that maybe they had derivatives positions.
So they did. I can confirm that right now.
There you go.
And I know the trade and you know the derivatives positions, and a lot of that stuff that we talk about, that was part of the reason as well. Get to Karen in a moment.
So for those of you that have been saying that Melissa Lee wasn't supposed to say the word naked shorting, I mean, they talk about it all the time. And right here on Fast Money, the host of Fast Money just admitted that there are other sneaky ways to go about shorting. And I guess they would be equivalent to naked shorting because you're mimicking shorting without actually doing it on the open market. And they specifically mentioned the Archegos capital trade. How did Archegos fall apart? Part of the reason is because they were leveraged on shorts 4, 5, 6 times on using some of these derivatives that I've talked about before. So for instance, if somebody sells 100 AMC calls, right, as a short position, you're not going to see that affected in the float at all, meaning the number of shares available is not going to change. The short interest is not going to change, but that hedge fund that sold 100 AMC calls is still short AMC. All right, enough of that. Looking at AMC, you could see that the calls continue to climb, just insane volume on calls. And if you take a look at AMC's actual reported short interest, you could see that it dropped today significantly. Now, every time that AMC short interest dropped recently, we tend to see a price spike. Right now, AMC is forming what is called a classic bull flag. As you see here, this is usually a very bullish pattern, and we tend to see a breakout to the upside. Now, obviously, we will need to see more volume come in on AMC. I'll talk about volume in a second, but this right here is a classic bull flag, and we tend to see this break to the upside. We could hit the $80 mark if and only if we continue to get more volume in And we also see the volume on those calls pump where a gamma squeeze could be initiated. Remember, I talked about the difference between a gamma squeeze and a short squeeze very briefly. A gamma squeeze occurs when a lot of calls are being sold to option buyers, and hence the market makers have to then go out and buy shares in order not to be in a short position. That buying of shares snowballs and pushes the price up, which then further propels more stock buying because everyone wants to jump on board and make gains. Very different from a short squeeze. And remember, both can happen at the same time. But yes, this huge drop in short interest here means, one, that short sellers have to cover, and two, they are likely scared of further price hikes, most likely due to the fact that we are getting insane amounts of call volume here. Just for the expiration of June 11th here, we're seeing 137,000 new contracts open. And if you look at the volume for virtually every strike, again, I mean, this is just extremely impressive. That is likely why short interest took a huge dive today, almost a 5% drop in short interest. But as long as volume continues to rise, and volume is actually dropping, this is the lowest volume that we've seen in 2 weeks. If volume continues to rise, we could see that gamma squeeze further play out. However, if volume continues to dissipate, then we could see it actually break down. These things are very hard to predict regardless of what anybody tells you. Now, AMC option premiums are so juicy that selling cash secured puts is like legal highway robbery. We closed our position for 44% on an AMC short put. We sold the $35 cash secured put on AMC expiring June 18th. We also had this 35-40 call spread on AMC expiring June 11th that was up 61%, went all the way up to 70% today. That will likely end up being 100% play. If you want access to all of our plays, link is in the description below. Would love to have you. All right, so the next stock that I'm going to briefly analyze for you is WISH. WISH saw a 50% gain today. However, this stock can actually trade in the $15 to $20 range very soon. And the reason I say that is because, yes, it has a relatively high short interest, but more interesting than that is the float available is actually not accurate. Now, if you look up WISH's lockup period, they have a lockup period that's set to expire Monday, June 14th. That's almost a week less a day from the time of this recording. However, there are 46 million shares in lockup. So these are actually not available and not part of the float. So the short interest is much higher than is currently stated. Aside from the float available and the short interest, Evercore issued a price target for WISH at $22. Again, it's currently trading at around $11. Loop Capital raised it from a hold to a buy rating. Deutsche Bank also reduced their target from $26 to $22, so still a $22 price target, and set a buy rating for the company in a report that was issued on March 9th. Credit Suisse's target is also $24. Oppenheimer's target is $25. So all of the targets that came from the big analyst groups are all in the 20s. And this is aside from the potential short interest play. According to this person's DD on Wall Street Bets, the short interest actually sits at around 40% if you account for the shares that are locked up. And the last stock I'll talk about is CLNE and show you why there is bullish momentum forming on this stock, and from a technical perspective, why a trade here makes sense. Now, all of these stocks, please keep in mind that I'm talking about whether it's AMC, whether it is WISH, whether it's CLNE, these are risky stocks. You do not want to oversize here. Please do your own research. Position size according to your risk tolerance. I'm just presenting you with the data and the analysis as I see it. Don't listen to me. Don't listen to anybody else. Okay, CLNE. So first of all, let's start with the technical. CLNE sitting right here at the 200-day moving average, and we bounced off it really nicely. And you can see that it is currently forming this descending channel, which tends to break to the upside. Now, prudent traders will generally want to wait for this stock to actually break the channel before trading it. So we're talking about the $11, $12 level. However, if you take a look at the open interest and volume for CLNE calls, you'll see that it is significantly bullish, especially around the at the money calls. If you look at the order sentiment, currently there are 91% bullish calls versus 9% bearish calls. So the sentiment is clearly leaning bullish. By the way, you rarely see a skewed distribution like this. If we review the Wall Street Bets mentions, you could see that the chatter among CLNE is up 320% on Wall Street Bets. The short sales are up 5 million off exchange. You can also see the short interest here on Ortex in yellow. That short interest actually spiked today. Earlier last month, they also announced a secretive deal with Amazon, where Amazon would be purchasing 53 million shares at an exercise price of $13.49 a share, which is higher than what it is currently trading. So if we do break out of this descending channel, we could eventually see the $15 range on CLNE, at least in my opinion. So based on the current volume, the expected volume from the meme trade, the call options that we see coming in, just pouring in for CLNE, the descending channel here that usually breaks to the upside, so hopefully we get an upside break, and the fundamentals, there is a lot of reasons to love. There are a lot of reasons to love CLNE at this price point here. I will also be looking at some of these options trades in the Discord. So again, if you want access to that, link is in the description below. Hopefully you got something out of this video. If you did, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these three you are trading. Please remember, these are risky stocks. These are not surefire things, okay? These aren't blue chips. This isn't something to pour your retirement portfolio into, but I get a lot of questions and I try to make videos that are relevant to the questions that I get posed. So hopefully you got something out of this video. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.